Let's talk money.
I don't have your money.
I know I'd be a lot happier with some extra cash.
Is this about money?
Obviously, this is all about money.
Oh, man, we got bills to pay, buddy.
With practical tips and a focus on scripture, let's talk money. With Dave and Reb. From More Than Enough. Real conversations about money for real people. Let's talk money.
Are you ready to talk money, Reb?
I'm ready to talk money.
I got my new glasses on today. They're not new. I got glasses on today because we were reading and I can't read without the glasses.
He can't read without, he's getting old.
Welcome to the show where Dave and Reb talk about Dave's eyesight. No, Dave and Reb talk about the hard issues around money. So thank you so much for joining us. If you're on YouTube, you get to see us. We're wearing matching
our face.
More Than Enough swag.
We are.
So
it's like our face t-shirts.
Even if you're not on YouTube, if you're driving, don't go to YouTube right now, but check out the podcast on YouTube at Let's Talk Money with Dave and Reb because you get to see the happy face.
Okay.
More Than Enough
Okay,
swag.
but here's the thing. We want you to respond and call us or email us or Facebook us. I'm just coming up with this idea. If you know why we're wearing a face on our front of our shirts.
Oh, well.
And if you know this and you call or email or send us a message on Facebook, we will put your name in a draw and you'll win something. I'm just making this up as we go.
I wonder what you'll win. If you're on YouTube, you see.
Oh yeah, you might win a T-shirt.
You might win some More Than Enough swag.
We'll see. Yeah, More Than Enough swag. That's what you'll get. Anyway, you tell us why we're wearing these T-shirts.
All right.
And a prize.
And there is a right
yours.
answer. There is a right answer. It's not just because I needed to wear a shirt today or there was no laundry. That kind of thing.
There is a reason we have this on, and our coaches cannot. You're not allowed to submit a
Okay, here's
response.
the disclaimer. Anybody who's involved or connected to More Than Enough cannot be. Anyways, I don't know how they do that.
Okay, so another funny thing. I have
Wait a minute.
What?
Before you do the funny thing, I just want to back the show up a little bit because the reason the show is here today is because of Brent Vandermeer and the good folks at Crosspoint Financial.
He may not want to sponsor us anymore when he actually listens to these.
Sure he will. So
yes,
thank you, Brent.
Crosspoint Financial.
We really appreciate it.
Go to them to find out about what to do with all your extra money. Mm-hmm. Yes.
Especially, actually, I'm going to just say this, especially in these times, we've talked in this podcast and show numerous times about fear around finances. And often we talk about it in the context of cash flow. But I know that 2022 was not a great year in terms of the investments that you might have. And you might have some questions or you might have fear or concern, or you might think that your future is slowly draining away. That's when you need to have a trusted advisor. And Brent
That's
is
true.
one of those people that we just love. So if you've got some fear and concerns around there, reach out to Brent and the people at Crosspoint, or I will say, or your financial advisor if you have someone advising. If you don't, then you need to reach out to Brent and his team. Yeah.
So Dave, just before the show, Dave says to me, as we were talking through some of the things that we're talking about today, he says to me, "Oh, I hear that once a week." I'm like, "No way." He goes, "Yeah." I'm like, you're exaggerating. He said, "No, people come into my office and say, well, I just want to win the lottery. Then all my financial problems will go away." Now I'm going to pause. Mm-hmm. Anyone listening?
Have you ever said that?
Have you ever said that or thought that? I have. Hand up. Yes. If I could just win the lottery. The exercise of faith is this, Dave says. Most people who say that don't ever buy lottery tickets.
So
that's a double.
It's and if you've been in my office, I apologize already. I try not to laugh outwardly, but the reality is we do say that. We say, oh, you know what? It would just everything would be fine if I just won the lottery. But of course, we never buy a ticket to win the lottery because, well, we're good Christian people, and good Christian people don't buy lottery tickets, which again makes me smile so much. God,
it does. Anyway, that's all. We're not saying that, please.
No.
Anyway,
do not stop listening now. It will be out of context, and there'll be some soundbite out there that says that's not what I'm saying. What I'm saying is there's this dynamic where in finances we often do that, where we go, oh, if I just did this, all my troubles would go away. But then we don't go and do that, even if it is a good idea or something that we need to do. And I'm not saying that buying lottery tickets is a good idea. So we'll stop with that right now.
But what was interesting to me was that so many of us think that. And then my question to myself was, well, then who are we trusting?
Of course.
What are we trusting? We're actually trusting a lottery system. And if my son Justice were here, he went and looked up the stat because he worked at a place where he sold lottery tickets. And I don't know, the chance of you get hit by lightning is far greater. Like, it
was like you would need to be hit by lightning 660 some times.
It was a big number,
600
hundreds.
Times.
Before
times.
You'd actually ever win the lottery. Now, we often see these great lottery stories, and even lately, about the big wins and all of that. But anyway, the reason we're talking a bit about that is, we're facing the reality of our finances, maybe knowing we're in trouble, but we're thinking that a lottery ticket could help us. And I was in Proverbs 13 this week because I actually did go look for financial verses this week. Dave, aren't you happy?
I am very happy. Thank you.
Wealth gained by dishonesty will be diminished, it says in Proverbs 13, verse 11, but he who gathers by labor will increase. The other translation is, he who gathers little by little will,
makes it grow.
Well, it makes it grow. Gathering money little by little makes it grow. And I thought, boy, do we need a shift in perspective? So today we're going to talk about some questions that you have asked us, especially regarding mortgages, because Dave's a mortgage agent. I'm going to ask him some questions. He's going to bring some clarity, and we're going to learn to be a little more patient. We're going to learn to get some perspective. And I was also thinking about the story of the storm, and the disciples are in the boat and Jesus is asleep and they're panicked and they think that he's not paying attention. In fact, they say, wake up, how can you sleep? And Jesus is like, what are you guys so afraid of? He speaks to the storm, and he doesn't go back to sleep, but he probably, if that was you or me, he probably just tuck himself back in and go to sleep. But I was like, we are so afraid of things we don't understand. And we went through a story with our daughter this week. There's uncertainty about some things, and that brings up fear. And you always say to me, oh, I'm afraid of things I don't understand. And if we just get some clarity and understanding, so we are hoping today to speak some patience into your life, some perspective into your life, to remind you that a quick win in the lottery isn't the truth of God for us, but gathering money little by little will grow. And if we're patient, and that's what any advisor, investor will tell you, to make choices, but be patient with the system of investment and the way the world of investing works. So I just want to blow that peace and that patience. And we're going to talk a little bit about mortgages, Dave, you want to say something.
I was just going to say, part of the reason that we're picking on mortgages this morning is that, there's been lots of talk and lots of volatility and all of that. But the mortgage decision is, in terms of cash flow, in terms of how we have the money to spend on a day by day, that one line item for most of us is the top or one of the top three line items that we have, that we go, oh, look at that. Like, that's a lot of money that goes off of my paycheck every time it comes in, that mortgage amount. And of course, it's an important thing. It's the home we live in. It's the place, whether it's rent or whether it's a mortgage. And we're going to talk specifically about the mortgage
And it's
payment.
one of the four, the main what do you call that?
We call that the four walls.
The four
right?
walls.
So-
That's a 4-wall item. Whether it's we're talking about mortgages, but at your rent too. That's that's your biggest line item likely in your financial story. So
and it's a big decision whether you're renting or whether you have a mortgage, because it is a consistent, and it's pretty important. If you don't make that payment every month, again, whether it's rent or whether it's mortgage, a few months go by and you don't have a place to live. It's an important piece. It's also an important piece because if you spend too much on that, then some of the other things that you might want to do, some of the other things where you say, I'd really like to do, well, I can't, because the only thing I can really afford to do is sit at home with one light on, and maybe I'll have a Netflix
because your mortgage is so high. It's
is
sucking most of your income up.
Sure.
Yeah. Okay. So let's start with this.
Mm-hmm.
Because we were just talking about there, and you just mentioned a missed payment.
Mm-hmm. During
During the pandemic, mortgage companies allowed people to put off their payments. Right. So up to 6 months, I think it was. Can that be done now? Is that something that's done? And what does that do to my credit score? I'm asking you a bunch of questions. Let's just say, if we defer a mortgage payment, can I call the company and say, you know what, I'm really struggling. My husband just lost his job. Can we defer on that? And how then does that affect the rest going forward?
Absolutely. My advice is always, don't call me after you've missed the payment. That's a really difficult thing to fix, if you will. It's that proactive approach to say, listen, I'm in duress. I could make this payment, but I don't think I'm going to be able to make the next payment. Okay, then we can work with the lender. There are absolutely helps. There are ways that we can do that don't affect your credit. There are ways that we can do that as happened in the pandemic. That was not a new rule. That was a rule that was always there. And we just took advantage of it, or we did. The Canadian population took advantage of it because of the uncertainty.
Right.
We went, okay, well, if I'm not sure I'm going to have my job in 3 weeks, I can defer that payment. So it's not a missed payment. It doesn't register as a missed payment. Essentially what happens is you put that payment on the back end of the mortgage. So you're going to pay a little bit of extra interest over the term of the mortgage. There are some consequences to deferring it, but those are very minimal compared to, I just missed a payment.
So what happens if you don't contact the mortgage company and you miss the payment? What happens
just
then?
like any other debt that you have, it shows up as a missed payment on your credit report. Again, that can have a negative impact on your credit. But more importantly, down the road, when you miss a mortgage payment, any other bank or any other mortgage company that's looking at lending you money for that mortgage is going to go, oh, okay, well, I want an explanation. What happened here? Why did you miss? And if it's one payment, there's grace for that. But if it's 2 or 3 payments, or if it's a consistent pattern of missed payments over the course of the year, those lenders will just say, sorry, you're too high a risk for us, and we won't lend you on the mortgage. And it narrows your options. It generally puts you in a position where you become a high risk client, which means high risk, high rate. And that means that, you're compounding now. Generally the people, when we miss a payment, we're also thinking, oh man, now I have to pay a higher rate. So I get a double kind of penalty there, because not only am I struggling to make ends meet, but now I'm going to pay a higher rate, or I'm more of a risk, and that compounds it, and that's discouraging, but it's real. It becomes the reality of, oh my goodness, I better be careful with the mortgage payment. So the bottom line there is anticipate that, look ahead, and say, if I'm going to miss a payment, whether it's rent or whether it's mortgage payment, and really take the initiative and call and say, listen, can we make an arrangement?
And that would mean we need to be aware of our situation. Like to be proactive, you have to have a certain amount of awareness. Like, oh man, I'm going to be in trouble. How many months can you ask for a deferment? Is there a number?
I mean, we saw that in COVID where, the banks just basically advertised you have up to 6 months. And that was, in a sense, there isn't a set number, there isn't a set thing, but the banks were really clear that, if you ask for it, we'll just give you 6 months. And that essentially bought most people who took advantage of that the time they needed to figure out, okay, am I getting a new job? Am I not getting a new job? Am I back to work? Have I figured out what is going to happen? And again, somewhere between 3 and 6 months, most of the banks, sometimes they'll do it month by month in the sense that they'll say, oh, we'll defer. And if next year you can't, call us back and we'll defer another one. Sometimes they'll say we'll defer 3. Again, there's a bit of a negotiation, and there's part of it. And this is the part we're calling and talking to, us to say, okay, let's develop a plan. What's going on here? Because again, the mortgage payment is one of the most important payments all of us have, our rent and our mortgage. It's the one where, again, statistically and ideologically, if I can say that, the banks know that you might miss a payment on your car. You might miss a payment with the credit card. But boys, oh boys, it's you're in some significant trouble if you're missing rent or if you're missing the mortgage.
Said at the beginning, it is the core. It is your shelter.
It's one of the things that we all want to have, a safe, warm place to sleep.
That would be the last place we'd want to miss, right? We pay that first.
Yeah.
Okay. So if you have any questions, you can always call our office, More Than Enough, or you can go to morethanenough.ca, connect with us there, just to get more information. If you find that you're in a position that this might be helpful.
I just want to say, if you're in distress and this is a place where you're like, okay, I don't know what to do, then let's get together and let's work out a plan. Reach out, and having someone from the outside who you trust, who can help. Sometimes that's a difficult decision. There's some difficult things that you have to navigate. And so, coming up with a plan, and part of that plan may be, I just need some time. Well, that we can work with, but
there might be more going on, and sometimes you don't want to take the pain away, but it might only be for a month. And like what we do at More Than Enough in our coaching, we want to look at your whole plan and make a good plan with you. Okay, so some other questions that came in. What happens when the mortgage rate increases, which it is for some of us on a variable rate? Does it affect our eligibility on renewal? What happens?
Sure. I mean, absolutely. There's a couple things that happen. So number one is when you get to renewal, for a lot of us, and I'm going to include ourselves.
Yeah, that's right.
The interest rate is going to double. So, 5 years ago, we were at the 2.5, if you're on a fixed, you might be at a 2.5%, 3% range. Now we're at 6.5%, 7, so you're going, okay, now, yes, I was paying down the mortgage over the last 5 years, so there's a lower amount, but I am going to pay a significantly higher interest rate. And so there are a number of things that we can do on renewal to help relieve that. There's a number of things we can restructure on renewal
But does it affect, like back to that question, does it affect their eligibility?
Well, that's exactly where I was going with that. So, because in the end, it is more difficult. Again, in 2016, the Government of Canada Institute across the board a stress test, which is basically a qualifying criteria. And so anybody who has a mortgage now actually qualified at a 5 or 5.5% stress. So the rates we're seeing now, you actually qualified for those rates. According to the bank, you could afford the mortgage payment at a 5.5% rate. So in a lot of ways, the distress, if it was just the mortgage rates that went up, there would be less distress. what we've seen is it's not just the mortgage rates that went up. It was gas. It was groceries. It was the cost of everything has increased as well. So that's compounded this. But the stress test, go back to the question, still exists, except for now we are stressing for an 8 or a 9% interest rate. And, again, we qualified at 5. Now we're qualifying somewhere around 8%.
Right.
Will the rates continue to go? Well, that's a question only the Lord knows. But from a qualifying standpoint, yes, your purchasing power, your borrowing power is reduced.
Right. So you can't get as much because the interest rate is higher.
Now, there's a whole bunch of qualifiers, right? So you may have increased your job over the last 5 years. So you might actually be making more. Well, that might offset it. You may have accumulated a whole lot more debt. Well, then that's going to reduce your borrowing power. So, there's a whole bunch of factors that we consider. But if we just look at the qualifying rate and what it, in a sense, that stress test and how it comes into play, then, yeah, it could be more difficult to qualify.
So to answer his question or her question directly, yes, it does affect your eligibility. But there's way more going on than just the increased rate. It has to do with your own income. Is it increased or is it diminished? Is your debt greater or has it been reduced even? Maybe you've been paying down your debt and you're in a better position.
And one thing that I can say pretty definitively across the board, I'm not going to say 100%, but about 90% of you that are listening, when you get to renewal, the current bank you're with is going to offer you a renewal. They're going to offer you, we want to keep you as a client, and they'll make you an offer. And that process does not take the stress test or any qualifying into account. You've been a good client. You've paid on time every time for the last, whatever your term was. We want to keep you as a client. So all you need to do is sign this piece of paper and acknowledge that the rate has changed and this is what your new term looks like. So again, there's no fear here that the bank will call the loan and you have nowhere else to go.
Right.
And you're going to lose your house because we come up for renewal and the interest rates have changed. That only happens if there are all of these other consequences, or you've missed payments with the mortgage, as we talked about earlier. A bank might say, well, you missed a whole bunch of payments. We no longer want to have you as a client. You need to go find somewhere else. And then, again, let's go back. We'll figure it out. We'll find a solution for you one way or another because, well, that's what needs to happen. So,
okay. That was a great answer, actually. I hope that you guys are finding this helpful today. There is a question. You've got a smiley face on.
Literally.
We got literally smiley faces on. Okay. There has been a lot of fluctuation with the variable rate, right? So, yes, just in case anyone cares, we are experiencing a variable rate. We can be honest about that in our own life for our mortgage. So it has gone up in 2022. A couple $100 we're paying more. And this person who's asked the question, if he'd known how much a fluctuation would do, he's not sure he would have chosen a variable interest rate. Yeah. And number one, does there need to be more understanding for a variable interest rate? And how does a client, a homeowner, know to go variable or fixed? Like, why did we go variable?
Oh, there's a lot of questions in there. So first question is don't panic. One of the strategies that we talk about it more than enough in terms of our variable is the strategy called payment hedging. And this goes back to the stress test. When we did the stress test, essentially you did qualify for a 5.5% mortgage. So that meant you could make those payments. So with payment hedging, what we did is we got the lower rate, but we voluntarily increased our payment to basically match and take advantage of that lower rate and overpay and take advantage of the prepayment privileges.
Just in case the rates would go up?
Not just in case. We knew the rates were going to go up.
Yeah, okay.
If you chose a variable rate in the last 15 years, the variable rate was going to go up.
Because it was so low.
We didn't know when.
Yeah.
We didn't know how much. We didn't like to acknowledge that it did, but we knew it was going to go up. So that strategy of payment hedging is what we call, you increase the payment so that when it went up, it was a question of when, then you could actually adjust your payment even down, or just wait until the payment comes to match yours, or till the interest rate increases the payment to match what you're already making.
Right.
So that does two things. It allows you to pay off a whole bunch of principal, right? So now your mortgage amount is less when the interest rate goes up because you've been overpaying, but you're also used to that payment, so it doesn't hurt as much. And of course, it allows you that ability to flex a little bit with the payment, that you can go, oh, okay, I'm not so impacted. In fact, I had a couple of clients go, hey, the interest rate raise didn't really impact me a whole lot because I was doing the payment hedging and it only went up $50, which wasn't a big deal because I've been paying so much off on the principal. Right. So if you took advantage of the payment hedging, which every variable rate client that I did in the last 7 years, I'm like 99% sure we had this conversation. If I didn't have this conversation with you,
call them.
That being said, we only have a few minutes left.
I know.
When we talk about the variable rate, we have seen a significant increase in a short period of time. Don't panic. If you can hold on with the cash flow, we are anticipating that the variable rate's going to go down. Statistically, historically, all of the indicators say that, and even the Bank of Canada itself acknowledges that we were planning to overshoot what our target was. We're waiting to see how inflation reacts to that. We're waiting to see a whole bunch of things. And if it reacts favorably, then we'll start to reduce the variable rate. So this is short-term pain. It is short-term pain. And if you've been on a variable rate previous to that, you've had the long-term gain, and now you're in the short-term pain part of it. So you do have two options. You can say, okay, I'm just going to lock in on the fixed rate, and I'm going to just take whatever it is. And then I know what the stable, consistent payment is going to be.
Right.
And that's okay. Like, there's nothing wrong with that. But if you're like, I think I want to ride out the wave and see what happens, and you have the cash flow to do it, yes, you may have to adjust your spending this year. Yes, you might have to not go on that holiday, and that would be hurt. You're going to have to make some changes to your cash flow to be able to accommodate the higher rate. We are anticipating that those variable rates are going to come back down. And when they do, again, you get to take advantage of the lower rate. And I'll end with this, just historical statistic. We look back over the last 25 years, the fixed rate and the variable, when we average them out and we compare the two, the fixed rate on average over the last 25 years was about 5.7%. And the variable rate was about 4.5%. So the variable rate traditionally is lower than the fixed. And we're almost at the end of the show. So if you're riding the variable rate, you have the cash, stay there. If you don't, locking in, it does make sense. And
it's your decision.
And it is really your decision. Don't look back and regret, as the question answered. Nobody could have known this. You could have not anticipated. But the thing you can impact, you want to impact, and that's overpaying. And we're at the end of the show. Right?
I know. I'm sorry. There's so many things we could talk about, but I thank you for all of this information. If you have any questions, please call More Than Enough. Please make an appointment. If you're nervous or concerned, we don't want you to stay in fear, and we want to encourage you not to panic. God is with you, and Lord, we just thank you that you are with us today on this journey, even of trusting you in our finances today. So we thank you for this time. Thanks, Dave.
And thanks to Brent and the people at CrossPoint Financial. And thank you. And join us next week when we talk money.
Let's Talk Money is a division of More Than Enough Financial Fitness, where God is transforming hearts and bringing hope for today and freedom for tomorrow. For more information or to comment on today's show, please visit morethanenough.ca.